welcome to the indicators and tools video. As of now, I'm pretty sure everyone has noticed that I don't use the charting software from my broker account. I use FX Choice to trade, and I also have an account with Traders Way. However, I don't use them anymore because it's not a regulated broker firm and not supposed to be trusted, quote unquote. So I have been using FX Choice mainly, and I don't like to use the MT4 platform, honestly, that it comes with. I prefer TradingView. TradingView is about $10 a month if you want to be able to load up a lot of indicators and charts together, which I don't think is a bad deal. I paid for the entire year just to get it out of the way. So I will be showing you how I load up the charts to begin with during the session, just because there are, I think, 2 or 3 different Euro USD, and they're just picking up data from different exchanges. So the one that I like is when I'm trading the Euro dollar, I like to search for Euro FX / US dollar. However, if you scroll down, here is another one, but this is picking up data from another exchange. I'm not sure why, but I prefer this one. This one is coming from FXCM. I've noticed that this one will pick up gaps whenever the Sunday session opens. Sometimes it gaps up or down. You will see gaps with this one. However, with this one, I'm sorry. Well, look, there's another one. With this one, or with this one, you will not see the gap. So that is the main reason why I use the Euro FX / US dollar. That is the one I always aim towards getting. And I will go over my moving averages. I have a very slow moving indicator, which is the 50 SMA, and I also have a more active indicator, the 14 EMA. I will go ahead and open that up. So this is my 14. I made the indicator line slightly thicker, and I also made it green. And for the 50 moving average, I made it thicker and I made it red. And it's for the simple reason that it's just easy for you to spot if the green 14 EMA is above the 50 SMA. That means that the chart is bullish. Once the 14 crosses underneath the red one, then it's bearish. And it's as simple as that. That is why I like to use those two colors. It's very easy to read, it's easy on the eyes, and it's thicker than the default setting that it comes with. I apply this indicator to my 15-minute chart, to my 30-minute, and when I switch to the 1 hour, and also on the 4-hour chart. It is more efficient on the 4-hour, just because whenever you see a cross, like if you see here, the 50 SMA is crossing above the 14 EMA, this bearish move is a lot more intense than any of the moves that you will see here on the 15-minute chart. However, the reason why I apply this indicator also to my 15-minute chart is because I use it as confluence with trades. Most of the time when I see a 62 entry short, I would identify that the red indicator is above the green, and if I'm going on a long position, I want to make sure that the 14 EMA, the green one, is above the red 50 SMA. And that's just one of the 2 indicators that are most commonly used. So if you use indicators that are commonly used by most traders in Wall Street, you will notice that they have a very strong impact whenever the chart is coming back down to these indicators. And if you notice here, it disrespected the 14, but it respected the 50, and it bounced back up. And if you notice, it always bounces or rejects these 2 numbers. I have been throughout the years, I have been playing around with tons of different settings. I've tried the 9 EMA, the 13 EMA, 14 EMA like I use now, the 15, the 21 EMA, the 25, the 50, the 200. I've tried a lot of them throughout the years, and I have to say that this setting that I have right now is my favorite. It might not be your favorite. You might already have favorite indicators that you use. The most popular ones are the 20, 50, and the 200. However, this one's work for me, and they're great. So I have been sticking to these. And also, one thing is, as you learn how to trade, a lot of people tend to bounce from different settings to different settings. They'll notice that one indicator is not ideal for them 2 months down the road and they change it. And every 2 to 3 months, they're changing indicators. That is not something that I would suggest people to do. Stick to a pair of indicators. Even if you don't really like them, just try them out for a little longer than 3 months, because you'll notice that no indicator will ever be 100% accurate. However, you'll learn the distance in between the crosses, what would do to the chart. So if you notice that this cross here is a very, I call this a mouth. I've never seen anyone call it that, but this is how I teach it to my current students, and is identifying this cross here as a mouth. How big is the mouth on the opening, and also is it arched all the way up? Is it arched just sideways or downward? I would draw out some examples, and I could probably use this. I think no, I cannot use that. I'll just use the arrows. I usually don't use those indicators. All right, so if you notice that it's crossing, if you notice that the green indicator, the 14 EMA, is crossing with a very inclined mouth over the 50 SMA, you notice that the push is most likely to be very strong. And then here, if you notice, if you draw your fibs, this should be a 62 bounce. And this is forming confluence with your indicators because the mouth is very open and is pushing up. If you notice here, this mouth here is pretty much sideways. So once you see a cross with your indicators and the mouth is just crossing over sideways, you notice that the momentum won't be intense. So that's why here you just see consolidation and it went the opposite direction. So this is something very, very useful to have under your belt, and it's something that I've only taught to a handful of people, and I learned this on my own. There's no book out there that has ever spoken about this. And also here, you will notice that this mouth was very, very intense here. And this one here, it was just sideways, so you don't see a lot of sideways action. And the reason why I'm showing you this is just so you can identify the crosses that actually make a difference in the chart and the crosses that don't make a difference. See, this one is pretty inclined and it has a big mouth. This one is declining and it has a big mouth. This is an excellent one going short. This is an excellent one going long. This one is an awesome, awesome cross. And if you keep moving back, you'll easily spot this crosses. This one is inclined, very, very bullish. This one is just basically sideways. So you'll notice that the chart most likely is going to consolidate at that level. So this is the reason why I enjoy having my indicators on the 15-minute. This is sample here that I show you on the 15-minute also applies to the 4-hour, 30-minute, and 1-hour chart. All right, so that concludes the session for moving averages. And now let's speak about sessions. Sessions, I only have them on my 15-minute chart, and I only show certain colors. This is very customized for my liking, but I will show you the name of the indicator. This is the CM Forex Sessions Highlight V1, and I'll show you my settings. I customize all these colors here for the simple fact that it's just easier on the eyes. Cancel this and open it again. All right, and then let's go to input. So I have the New York Open. The New York Open is this line here. The New York section, I have it unselected. If I select it, you'll see it there. I know that this is the New York session, so that's why I just don't keep it on. So I know when is the London session, when it starts. I know when the New York session starts, and I'm only going to trade until noon. The London session, or the blue session here, it completes at 12 o'clock p.m. I don't trade after 11, so that is why I don't need the New York session highlighted here. And also, I do not trade the Asian session, and that is why I have everything selected. I do have certain parts of it highlighted. It's just because there are 4 sessions. You have the Aussie and the Asia. People consider there's just one, but you know that it overlaps by 1 hour. Minor importance for me. I don't care about it. And also this here, this identifies when the Euro session opens, and it just creates more colors on the chart. So that is why, oops, not this one, Euro open. That is why I don't have that one selected, because I can still see here the change in color when it's opening. So those are the changes that I've made to my settings for the sessions. And again, it's called CM Forex Session Highlight. You can easily just go to indicators here and search for it. I'm not sure if it's not showing because I already have it. Session highlight. So yeah, there's several of them here, but just look for the one that I have. So CM Forex Sessions Highlight V1, and I only have it here because if you apply this indicator to the 30-minute or 1 hour or even the 4 hour, you're just gonna see a ton of lines because you're dealing with higher time frames, and it's just not ideal. And the reason why I also have this session here is because you're able to identify certain patterns that happen at the beginning of the session and towards the end of the session. That will be for a different topic, but it just allows you to notice certain patterns. Also, when you can also see here that it consolidates a lot of time, it consolidates during the Asian session, and then it starts just gaining momentum and direction during the London, and it always happens, consolidates a lot during the Asian session. That is one of the reasons why I don't trade the Asian session, but it helps you identify where the patterns are going on the chart. So that would be the sessions indicator. And also I use the kill zone indicator. This is an indicator that I believe my mentor ICT created this one. And the reason why I use this indicator is because in this points here, in this kill zone times, is when you will see most of your trades when it comes to the 62 entry or even a 38 entry. And again, these are customized settings and colors that I have. Let me go back to the object tree, and right here, ICT kill zones. Let's go to the settings. This had a lot of different colors. I'm the one that changed it to gray. I have it specified the intensity of the move that you will see. This is during the New York session. I don't really trade this around this time of the day, so that's why it's a lighter gray, darker gray on the times that I do trade. And I don't have everything selected. I removed the Asian kill zone since I don't trade the Asian session. So yeah, it is something good to add to your chart. It is not necessary, but it is good to just spot parts of the chart where you will see patterns, because if you go back in time, if you study the chart going down, you'll see rejections in prices. See, very close outside of the kill zone, rejection, 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 a rejection, pullback. So rejection. It's not, I'm not saying that it will always happen like clockwork. It's just that it's ideal for you to just look at that and just anticipate a push going the opposite direction during those kill zones. And moving forward, I also have here my stochastic RSI. I only use this on the 4 hour, and it's just for me to gauge like overall market direction. It is not necessary to have this stock RSI here. I just have it for the sake of having an extra indicator on my 4 hour chart. Just because if you think about it, my 4 hour chart with my 14 EMA, the 50 SMA, and this 120 smooth moving average is good enough for me to gain an indication of where the chart is going. So I also customize the settings on the stock RSI, and I changed the colors to green and red, just like my indicators. So whenever the green crosses, you know that it's a bullish move. Whenever the red crosses, you know that it's a bearish move, just like the regular indicators. I have noticed that I didn't mention to you guys the settings that I use for these two indicators right here. And they are very, very strong points. If you notice, it bounced right in that zone and it kind of consolidated inside of it. And that is something that you will notice. You will see some kind of respect at this level, but it also bounces inside and consolidates within those ranges. And that is not something that you will see with the regular 40 and 50 indicators. So I will show here my settings for that. So it's two of them. Is the smooth moving average. The length is 120 and the source is high. And I set them to black to not have a lot of colors on my chart. And then I also have the same one, but now this one is low. The 120 smooth moving average low. So it's those two, high, low, same settings, together with the 14 EMA and the 50 SMA, and also the stock RSI. And in this one, I have the default settings. I just changed the colors. And that is pretty much all the settings that I use for these indicators and all the indicators that I just use overall on my chart. So now I would like to go over the price range indicator. This is something that I enjoy using. It is very useful. And it would actually be inside this section here. So you just look for it, price action. I just happen to have it there because I use it on a daily basis. And this measures the amount of pips on a move. If you click from the top to the bottom of a move, 63 pips. So this is very beneficial just because before you enter a trade, for example, this morning, I took this trade here. So it's from the top to the bottom, 62 bounce, then it bounced to the 70, and a short right here. So if you see this bounce here on the 62, I ended up taking the trade short here because I had already bounced on the 62, so I shorted here. Most of the time, it will not come back and retest the highs to stop people out. It doesn't do it all the time. If you notice here, it went up and it just flushed. And sometimes it will do that. So that's why if it had already rejected your entry, you can start loading up in your position around that area. And if it goes back to test the 62 or 70 or 79, you can add more to your position there and then just watch it flush. So if you get into the trade here, or if you anticipate getting into the trade around this level, you can measure the distance between your entry, the 62, because this will be your first entry short, and your first TP. Your first take profit area will be at 22 pips, which is perfect. I ended up shorting around here, so that still gave me about 15 pips on my first TP, which was awesome. Then I took more profit down here along the way. So that is a perfect indicator for you to always measure the distance and also see how many pips are you able to grab from the market with that pattern. Don't worry about how much money you can make, because automatically people trade with one lot and they think, okay, one lot is with 10 pips is $100, and then you start thinking about dollar signs like, okay, I want to make $100 here. Do not think like that, because you start making emotional decisions. Once you start making emotional decisions, you don't think clearly. So that is one of the reasons why I like to use the that indicator, the price range indicator, but it is only to measure the amount of pips to see if the strategy is there and if I should take the trade, not for doing the math in regards to how much money I'm going to make. And also, I like to use the arrows, and I like to use the arrow in regards to measure the moves of the legs, which is called measured moves. So if I pull out my legs, my arrows for my legs, it'll be from the top part of the chart to the bottom. You copy and paste it, and then you paste it to the tip of the retracement. So again, you will measure the arrow from the top of the fibs to the bottom of the fibs. You will copy, paste it, and you would paste it and drop it in the farthest retracement that it had on the chart before it went in your favor. And if you notice, it ended up right here, which is pretty much spot on. It was right there. For the sake of the length of this video, I will not give more samples, but it is something very good to use. Do not anticipate always getting a complete measured move, but just know that that is a potential take profit area for you to look after. So the arrows is something that I use on a daily basis. Also the price range indicator is something that I use on a daily basis as well. So this concludes the video for all my indicators and tools. There are a ton of indicators out there and other tools I don't use. I don't think it's necessary, at least for my style of trading. I would say try to stick to just a handful of tools, and you don't want to just overwhelm yourself, because once you start making trading difficult, you're not going to be a successful trader. So just have things as simple as possible. There's no need to overcomplicate anything. Thanks for watching.